Hi guys, welcome to this special show on Moneycontrol. I'm Karunya Rao and today we'll give you an all-round coverage on HDFC Limited and HDFC Bank merger. This morning we woke up to the announcement that HDFC Limited will be merging with HDFC Bank. Now what essentially it means is that HDFC will acquire 41% stake in HDFC Bank through this merger. Now, HDFC said that its shareholders will get 42 shares of HDFC Bank for every 25 shares of the NBFC that they hold. The merger of HDFC and HDFC Bank is all set to create the third largest entity in India in terms of market cap. In fact, the combined entity arising out of the bank HDFC's merger will feature among the world's 100 most valued firms in terms of market capitalization. This is, of course, according to Bloomberg's data. I'm sure many of you did FOMO buying this morning, as seen in the stock price as well. Both HDFC and HDFC Bank sold. But some of you must still be wondering if you can still buy. Have you missed the bus on the HDFC twins? And of course, what to expect as a customer of HDFC Bank now. What's in store? So to give you a 360-degree perspective, we have with us today Gurmeet Chadha of Complete Circle, Madhuchanda Day of MC Pro and Lovai Navlakhi of International Money Matters. Guys, thank you so much for coming in today. Madhu, coming to you first. This big merger of the millennium was always anticipated till it happened on the first trading day of the new fiscal year. The big got bigger as HDFC Bank added to its heft and profitability by integrating HDFC Limited along with the holdings of HDFC and HDFC investments into itself. Now my question to you is, Madhu, why now?
See, as the senior management of the group stated, that the situation has changed quite a bit. First of all, I would put it simply, it was a compulsion of HDFC Limited. Because given its cost of fund being an NBFC, which is much higher than the banks, and the aggression that we have seen from the banks, from the peer banks in the mortgage space, it was very difficult for HDFC to continue to grow profitably in this business. And the regulatory environment has also changed quite a bit. And now there is hardly any difference in terms of the regulations of the large NBFCs vis-a-vis bank. In fact, all large NBFCs above an asset size of 50,000 crore are almost similarly governed by RBI, similarly regulated, by RBI as the banks. They have similar asset classification norms. They also have to, provide LCR. So the regulatory arbitrage has reduced. In fact, they have to have the same kind of, core banking software which the banks are required to have. And that is why for a monoliner like HDFC, with a cost of fund disadvantage, there was no point trying to compete with banks. And I think that was the most important rationale of the merger, and the regulatory costs, which were draconian in the past, that has also reduced quite a bit.
In fact, Madhu, why don't we hold that thought? Because earlier in the day, Keki Mistry had given an exclusive to CNBC TV 18. So let's listen into how the math will play out before we proceed further with the conversation.
In addition to the SLR on regulated deposits, HDFC is now also required to maintain a liquidity coverage ratio. Consequently, the gap between the liquidity requirements of a bank and an NBFC have considerably reduced. Also, NBFCs are required to move to a core financial service solution platform, which is akin to the core banking solution of a bank. HDFC currently does not have a priority sector lending requirement, and hence, as a part of the combined entity, HDFC Bank would have had to raise funds and increase its PSL requirement through direct lending in the area of agriculture and micro, small, medium enterprises industries. HDFC Limited, as you know, is the promoter of HDFC Bank, and together with its two subsidiaries, currently holds approximately 21% of the share capital of the bank. Post the effective date, HDFC shareholding of 21% in HDFC Bank will be cancelled, and this will open up a potential legroom of up to 7% of further holding for FPIs in HDFC Bank.
All right. In fact, if we talk about this merged entity, it's all set to carry a $190 billion tag once this merger goes through. And Gurmeet Chadha, I'm sure, is one of the very many happy investors who have been betting on HDFC for a very long time now. Gurmeet?
Yeah, I mean, good start to the year, Karunya, and both as an ex-employee and long-term shareholder, I think this is welcome. But I think the we should wait for the entire thing to pan out. I think market tends to discount positive things early, and then the transition will take time. There will be a lot of regulatory approvals required. There will be We have to see whether RBI gives any regulatory reprieve in CRR and SLR and priority sector lending. And we also have to see some impact on P&L because, as the focus shifts on getting additional PLR, so let's say agriculture, your 18% borrowing has to be in agriculture portfolio. A lot of these priority sector portfolios are low yielding portfolios, right? And also the CASA drops if you go by previous incidences. So it will take time. There will be immediately some impact, but I think long term this is structurally positive. Also, I think you will see a lot of clarity coming on more NBFCs now applying for. I think there's this arbitrage of NBFCs and banks has reduced. So you will possibly see more beneficiaries. So more NBFCs will take a cue. RBI will also figure out some way of having a holding company in terms of figuring out bank stakes in insurance, asset management, securities business. So a lot of clarity will come there as well, which I think is structurally very positive for financials and banks in general.
Gurmeet, we've been hearing how positive this development is for the investors of HDFC Limited. But for HDFC Bank, if you could give some clarity, because many investors, many retail guys on the street right now are not sure how these things are likely to play out. How long will it take? Should they stay invested? Should they buy more at this current juncture, despite the 20-odd% run up? What would you say?
No, I think if you're a long-term investor, as I said, I think structurally this is a very positive development. Assuming we get all regulatory approvals, there will be in the short term some P&L impact. So CASA, for example, can drop from 45% to maybe below 35%. There will be some impact on the spreads, as I was trying to figure out. While they have stated that micro qualifies under priority sector lending, we have to see how much RBI allows, how much time frame it's given to take the SLR, CRR, and private sector. Also, I think there will be huge cross-sell opportunities. So, we've heard management talking about 70% HDFC Limited customers do not have a HDFC Bank account, right? Similarly, you will see a lot of other opportunities. Also, balance sheet size, right? The combined entity is 18 lakh crore balance sheet now, with almost 15% market share now. It's next to SBI. So this will create a huge giant, and I think that becoming bigger thing probably will play out effectively in banks.
So if today, let's say you had to invest in either an HDFC Bank or an HDFC, the NBFC, where would you park your money?
Tough one. I'm invested in both personally, but since now the combined entity will be one, and if I'm a long-term investor, I do a stock SIP in HDFC. It's been very long. I've been doing it. I recommend the same. I think I can do gradual accumulation. Sometimes, the positives gets highlighted very quickly in the price, and you can get carried away. So you can ignore the near-term noise. I think the long-term prospects look good.
Well, what about other businesses, insurance, AMC, securities, etc.? How are things likely to play out? Yes, you pointed out about cross-selling opportunities. That's a big plus. But in terms of independent businesses, which one do you like most?
So actually, I like both asset management and insurance business of theirs, especially the life insurance. It has corrected, the reinsurance rates went up, COVID claims came up. So it's a perfect cocktail of what can go wrong with the sector, right, in times like these. But I think it's a good franchise. We have to see, because the current share is 48%. They want to take it up to 51%. RBI in the past has refused, Axis and ICICI. We have to see how this plays out. But assuming, if they do get the approval, I think insurance penetration is hardly 4% in the country. HDFC Life has a great persistency ratio, which is policies crossing, 5 years, because insurance is a very long gestation, back-ended way of making money. More the policies age, more is the profitability. Their product mix is amongst the best, so they have a nice mix of protection, annuity, and both participating and non-participating products in the market. Not more as much dependent on bank in terms of selling insurance, what they were in the past. The bank share is not just down to 45%. a lot of digital initiatives. So I think in terms of all metrics, which is value to new business, the cost ratios, persistency ratios, I think it should do well. And I think current prices are far more reasonable than they have been for HDFC Life.
In fact, you know what, we also spoke to Sameer Arora of Helios Capital earlier in the day. So he also had similar things to talk about when it comes to other businesses and cross-selling opportunities. So let's listen into that.
If you say that it is good for HDFC, but what about HDFC Bank? Effectively, HDFC Bank has taken over a company and paid market price for it. Where do you, in a takeover, if you call it a takeover, would you get it without paying some express and premium, which normally in these things would be 20-30%? Not, I mean, I'm just saying if it was not HDFC Bank, but somebody else tried to take over. So in any case, if it is good for HDFC and now it is part of HDFC Bank, then in theory it is good for them also. Main thing is that there was this artificial distinction. Like we used to say, by the way, ICICI Bank is one of our top holdings, and now HDFC Bank has like nearly same. Otherwise it was number 2 because of its underperformance in recent that ICICI Bank had these valuable subsidiaries and HDFC Bank did not have these subsidiaries because they were subsidiaries of HDFC. Right. So all that also gets resolved from here on. Plus, you know, in this business these days, big is good, and it might be one of the $100+ billion maybe non-tech company. It might be having one of the highest growth rates in the world if you just didn't include tech companies in it. So I think it was always good, and now just makes it a bit cleaner also in every other way. In terms of cross-selling, in terms of synergy, in terms of even getting a simple FI ownership down a little bit. All these things are valuable.
You know, when the announcement was made, Mr. Deepak Parekh had called it a merger of equals. And when it comes to HDFC Bank, especially when we talk about the prospects and this whole merger math, profitable and synergistic, these are the 2 words that have been unanimously sounded off by most people on the street. But Madhu, I want to understand what are the points of bother, if any, that you would like to flag off for our viewers who also may want to invest in any of these entities going forward.
See, they're not really long-term bothers, but every merger has got its issues, and the merger of HDFC with HDFC Bank was always mulled, and people used to say, the regulatory costs are very high. So they have not quantified the regulatory costs, but yeah, all said and done, they have to provide SLR, CLR put together to the tune of 22%. But of course, in a falling interest rate environment, the cost of raising the resources is loads lower, and they have a 15 to 18 months window, and HDFC Bank's deposit engine is firing very well. So raising that kind of a resources at a competitive rate will not be a tall ask. Of course, so to that extent, it's a lesser evil than what it was before. The second thing, which is a point of bother, is the priority sector. They have to provide 40% on priority sector and the subsegments within the priority sector. But now there is a provision that you can do it with PSLC, that is PSLC certificates also, and that market is huge, 550,000 crore, and they themselves have some bonds, to the tune of 80,000 crore, which qualifies. And HDFC also is very keen on aggressive micro lending, and they are also keen on ramping up, the affordable housing business. So these are long-term mitigants, but we need to see in the near term how this costs stack up.
Right.
So, these are some of the irritants, but I would say, as all the other participants have said unanimously, this is definitely a long-term positive.
Just one question. One of our viewers has also sent it to us. Shareholders of HDFC Limited are getting only HDFC Bank, and why not any other subsidiary, as it was, it had holding in all of those other entities as well, and will it have any impact in terms of value to shareholders? Madhu, can you address that for the viewer?
So the thing is, what was HDFC previously, as per our current understanding, of course, this is something which is subject to regulatory approval. Now they will become subsidiaries or associate companies of HDFC Bank. So previously, when we used to do a sum of the parts for HDFC Limited, we used to consider, HDFC Bank, the insurance, the MC, etc., as the sum of the parts value for HDFC Limited. Now we have to do the same for HDFC Bank. They are all going to be subsidiaries and associates of HDFC Bank unless and until RBI asks for a holding company structure, which, as of now, the other peer banks are not required to have that kind of a holding company structure. So in all likelihood, HDFC Bank will also not be required to have a holding company structure. So everything they are going to now get under HDFC Bank.
Okay, makes sense. The big question right now is, yes, it's going to be a win-win for HDFC Limited, HDFC Bank. But the bigger question is, could it be a death knell for other large NBFCs? And Madhu has shared her note for MC Pro readers and subscribers, and she thinks perhaps it's a writing on the wall. But Gurmeet, I want to ask you, what is your sense on how other NBFCs in the space, the larger players, are likely to react and sort of behave now in the industry?
So, Kanya, I think there will be, I think there will be eligible NBFCs, because unfortunately, a lot of the NBFCs are also corporate owned, which RBI has always had some reservation about. So, some of them, will apply. I think the broad template is clear. NBFC arbitrage with banks is diminished, whether it is NPA classification, whether it is other supervision matters after post ILFS. So, some of the larger ones with 50,000 crore plus balance sheet, great track record will apply. Unfortunately, last 3-4 years, only one of them has applied this on-tap license, which RBI has. Some of the smaller ones will probably take up, the small finance banks and other things. But I don't think so. I think the industry is very large. While there is a definite advantage larger players and a banking license gives you in terms of cost of funds, and especially when interest rates start going up, if you have a higher CASA ratio, your ability to grow credit because the cost of fund is lower is much higher than NBFC. So the advantage would be there, but it's a very underpenetrated market. I heard one presentation that company, investors with 700 plus CIBIL score, the market share of some of the NBFCs is only 1 or 2%, even the larger ones, including Bajaj. So I think it's a large market, and I think things will coexist. Yes, some people will definitely have an advantage, but one thing is clear. I think the liability side, which is your cost of funds, will make a big difference going forward, and that's when the various banks will probably get differentiated.
Okay, Lovai Navlaki is also with us, and as promised, let's also understand what lies in store for customers. Now, typically in the past, whenever we've seen any consolidation in the banking space, largely in the PSU bank space, there has been some teething issues, some confusion among customers of the bank. They've not been sure when their checkbook will have to be reissued, which branch should they go to. All of those concerns usually happen. But with a merger of this kind, where an NBFC and a big bank are uniting, what should customers expect? Will it be a seamless transition?
I wish it is as seamless as we imagine it to be. For sure, despite the fact that both the entities are from the same group, so they'll have less areas of conflict. I'm sure that there will be teething troubles. The good thing is that in a way that regulatory approvals may take a little while, and that might give time for many of these issues to be ironed out before the customers actually face this issue of change. But frankly, it's fingers crossed on that one, and do hope that they, cross the T's and dot the I's well, even in this transition, as they might have done on the agreement itself.
What about, there were some concerns with respect to digital platforms of HDFC Bank, and, it's been in the news on and off for the last couple of years. And now with this transaction, this merger, when it happens, will it cause some more issues for customers to log in, to operate the different accounts, who to contact, which branch to go to? Should they file a complaint to HDFC Bank or HDFC, the NBFC? I mean, do you expect some of that as well?
No, I think they will resolve it, and they will have something in place for that. At the end of the day, once the approvals are in place, there will be only one entity. and that will be HDFC Bank. So I'm guessing that everything will go to the bank and the banking ombudsman in that space. Um, I think that we are sort of jumping the gun in trying to imagine all the issues for sure, and a merger of two entities as large as this will have its own set of different processes. Even though in writing they may be similar, in practice they may be different. And so to that extent, people need to understand how to deal with this. Plus, I suppose even the people who are going to interact with customers, how well they have been taken care of, and therefore, they aren't sort of expressing or transferring their anger onto the customer. If they are sort of taken care of and they have been explained exactly how things are, and maybe their security in their jobs is that, is that in place, he will not have such issues. But if not, yes, you will surely have some story or the other with somebody in a particular branch reacting in a manner that was not warranted. But I think we have to take it in our stride.
And should customers be worried, especially those who have debit and credit cards and who are using a whole host of promotional offers, discounts, etc., from the cards of HDFC across different platforms, different stores and all? Should they be worried of any change in these discounts and promotions?
It's all a question of, I think these questions are more relevant when two sort of different groups merge.
Like perhaps in
Whereas
the
if
case of
it's a-
Citi and Axis.
Yeah, so in this case, I think some of these things they would figure out a way to ensure that, one doesn't eat into the brand of the other in terms of the image that they have created. Both have created pretty strong, clean images over the years, and they will want to protect it and get the benefit of that for all the stakeholders, whether it's the customer, the shareholder, the employee. So I'm guessing they will focus on all of that.
Now, Mr. Navlakhi, I know you're not here for talking stocks and talking in, investing in equities directly, but still, I mean, I would like to ask you if you have a view on this mega merger. What do you think it's going to do for the investors and those especially who feel like they've missed the bus today? Should they dip in now? Should they look at maybe SIPs or some other route to indirectly at least stay invested in this behemoth?
So I think for retail investors, the starting point of investing is typically mutual funds, and if they have index funds, they have already participated in this, so they should not feel that they have been left out. I think equity markets always give you opportunities to both buy and sell. You just need to be patient. So even if you have missed out or what you feel you have missed out, you will get an opportunity at an appropriate time for you to pick up the stock. If you feel that, I'm really having a very strong FOMO feeling, then go ahead and nibble in and buy a little bit of the stock so that you're comfortable. You were talking earlier about the way the price moved today and people missing out. Frankly, those who may have bought HDFC Limited in the early part of the trading day actually have found now the price is lower than the price it was in the morning when the price closed. So they may actually, those who bought it early might feel, oh no, I bought it too early. Those who bought HDFC Bank too very early in the morning, the price is pretty much close to where it was when it started. Of course, not the closing price of the last week. So I think there will be opportunities. There is really no need to rush. I think buying an index fund is a great way to participate in this. And that might solve the problem and also remove any heartache, blood pressure that you might get while tracking these stocks.
Okay. Gurmeet, just one final question before we wrap up. One of our viewers is asking, can we see HDFC Bank at the level of HDFC Limited around 2,500 odd soon? I'm not going to tell you to track levels, but just want you to tell our viewers if they have sort of not been able to buy today for whatever reason, is the current level still a good bet to, sort of place your bet on HDFC Bank, or should they wait for some dip, some correction, and then maybe look at it eventually after a few days down the line?
See, I don't know whether it will cross the HDFC limited level, Karunya, pretty soon or not. But I've been, I was an employee of HDFC, and since that time, the profits are up some 40 times, and so is the stock price, right? So if you're a long-term investor, I think what you should be tracking is how the combined entity will grow in balance sheet, how's their net interest income will grow. There will be some impact initially on the P&L, is the point I made. So there could be at some point of time, you might see some subdued numbers because the transition will have its own impact. I don't think so. 10% movement, unless you are a trader, is like missing the bus. If the story is strong, which is what the bank has demonstrated in the last 20 years, I think it's good too. But I agree with the view of my colleague who said that I think some of the positives get reflected in the price very early, and you may tend to get carried away. Don't do that. I think if you're a long-term investor, do it gradually. I personally do a stock sip for last 10 years in HDFC Bank, and it's been pretty rewarding despite last 2 years of relative underperformance.
Madhu, even you and the entire team at MC Pro has been quite positive about HDFC and most of its group stocks that we cover. Do you finally think that the sleeping giant has woken up and now finally there will be some action after the lull period that HDFC Bank especially has been going through?
See, it was a sleeping giant from the market's perspective in the last few years.
Yeah.
But I mean, other than the technical problems which had in their digital business, that was a bit of a bother. Other than that, I think they have had very consistent performance. In the last 20 years, you won't find a company in the entire world which has had the consistency which HDFC Bank has demonstrated in the last 20 years. So you have to give it to him. So this is, I would say, a beginning of a new journey for HDFC Bank. Yes, they have been a very, very calibrated player. And that is why I think they figured out somewhere down the line that, to profitably grow, they need to add another leg. And that leg was, mortgage and the variance of the mortgage. And they have done a win-win deal. And I think they have a long way to go from here. And so I don't think investors should be worried about missing the bus or anything. As one of my co-participants rightly said, and I truly believe in that, the markets give you ample opportunity. So please look out for those opportunities and have your shopping bag ready with quality stocks like HDFC Bank.
Madhu, do you have a favorite in the HDFC group?
Well, I think now under HDFC Bank, you will be pretty much getting the entire group. While all the individual businesses are leaders in their own right.
So good proxy play for owning a chunk of.
Absolutely. Yeah, absolutely. So it's like a universal bank now. So I think, absolutely no worries about it. If you're too worried about today's movement, don't worry. You will get the price, maybe, I don't know whether tomorrow, day after, but somewhere down the line.
Absolutely. I mean, it's been an action-packed day, absolute, phenomenal announcement that we all woke up to, a banking and financial behemoth in the works, HDFC Limited merging with HDFC Bank. Guys, thank you so much, Gurmeet, Lovai and Madhu for joining in and, telling our viewers how to invest in the various entities owned by HDFC, what lies ahead for customers, for the street, for traders and investors. On that note, we'll wrap up the conversation. Thank you for watching.